There are many benefits of investing in real estate, and today I want to discover 7 of them in particular to show you why I think it's very smart to get started or to continue investing right now. Today we're going to discuss 7 benefits of investing in real estate. And for those of you who may not have started already, here are a couple of quotes that might be interesting for you. Andrew Carnegie, you all remember him, one of the greatest industrialists ever, at one stage one of the wealthiest people on this planet. He made the observation that 90% of all millionaires become so through owning real estate. Notice we say owning because you can make money by investing in real estate, and often when people become millionaires by doing other things, they put the proceeds of their money-making ventures into real estate, and it grows even further. Either way, real estate tends to be the foundation of most rich people's wealth. And Louis Glickman also said, the best investment on earth is earth or land. They're not making any more of it. So these are all compelling reasons why real estate is the investment vehicle to get into. The first one is appreciation. The National Association of Realtors reports that the national price of existing homes increased by 5.4% annually from all the way back in 1968 to 2009 on average. That means that if you buy a $200,000 home appreciating at 5%, a bit lower than what they say it's been on average, that's equivalent to $10,000 in the first year, and that growth will continue to compound. And with simple compounding interest alone, that home after 5 years will be worth over $255,000. Now that $255,000 is if you paid cash for the property of $200,000. But one of the benefits that we'll discuss in a minute is that you can get leverage. When you buy a $200,000 property, you don't need to put up $200,000 cash. You might have only put up $40,000 or $50,000 cash, and yet the value will still have gone to $255,000. If you put up $50,000 cash and the value goes from $200,000 to $255,000, you've not made 20% of your money, you've made 100%. You only put 50 in and it went up 55,000. Reason number 2 is cash flow. If you buy a home and rent it for $1,500 a month, but your mortgage and expenses only come to $1,100 a month, that means you are generating $400 a month of cash flow in the form of residual income. But here's what happens. As time goes on, the value of that rental will go up. And your costs will go up too, of course. But even so, if they all go up in proportion, the proportion of your profit tends to go up. You've got cash flow coming in while you own that property. And you think about it. If you invest in gold, you don't get any cash flow. In fact, I don't think buying gold is an investment. One of the criteria to be an investment is it's got to generate cash flow. You only buy gold in the hope that it will go up in value so that you can sell it for a higher price. It is pure speculation. No income, no investment. Real estate has great cash flow. Benefit number 3 of investing in real estate has to do with leverage. Now, we touched on this a moment ago. But again, if you buy a $200,000 home for 20% down, which means a payment of only $40,000, and the home increases by 10% in value, then it's worth $220,000. And that $20,000 increase came not from a $200,000 property. Well, it kind of did, but you didn't put $200,000 in. You only put $40,000 in. So you're getting a $20,000 gain out of $40,000. That's a 50% return, and that doesn't even take the rental return into account. Appreciation is great, but when you've got leverage, it is amplified. Now, full disclosure, if the value of the property goes down, then the decrease in value is also leveraged. But for reasons that we've already discovered, on average for the last 30 or 40 years, prices have gone up by 5.4% a year. I'm not too worried about the value of real estate coming down. You've got leverage, it amplifies your returns. Reason number 4 is that with real estate, you get tremendous tax benefits, better than with any other investment that I know of. Let's say you've got $5,000 in net income, cash flow, from a $220,000 home. Then you can also, in addition to just having that $5,000 in income, you can claim what's called depreciation. This is a phantom deduction. You can write your home off as if it had a useful lifespan of 27.5 years. And what that means is if, for example, you had $8,000 of depreciation, you can deduct that $8,000 of depreciation against your $5,000 of income, so that on paper you're running at a loss of $3,000. that means that not only would you not pay tax on the income from this property, even though you're earning $5,000 a year, not only would you not pay tax on that, you can reduce your other taxable income by $3,000. The difference between the $5,000 profit from the property and the $8,000 depreciation. You can claim that $3,000 loss against other income. In other words, the government is subsidizing your investment in this piece of property. I love it. And the fifth reason is long-term security. Think of it this way. During a recession, it's the most expensive homes that come down in value the most, sometimes as much as 50%. While homes just below the median value, they tend to go down a lot less, typically as little as 9% during a recession. And this demonstrates why properties at or below the median value allow for the most remarkable market resilience. But whichever the value of home is that you've invested in, a recession does tend to bring values down a bit. But I've never found a 10-year period of time where values have been lower at the end of 10 years than at the beginning. Meaning if you can hang on for long enough, in general, despite recessions and downturns, the value goes up, as we saw earlier, by 5.4% on average in the long term. And that means that in the long run, real estate is a great long-term secure investment. The only way you can lose a home is through an earthquake or a landslide or a fire, and you get insurance against that. You don't get insurance against companies going bankrupt on the stock market. It is a very safe and secure investment. So reason number 6 is that there is a bit of work involved with residential real estate or commercial real estate, but in the scheme of things, it's a reasonably passive investment. In fact, if you have a property manager in place, you hardly need to do anything with the property. Probably fill out a few forms every year and your accountant will do that for you. In the scheme of things, most investments require a bit of effort, but if you have a property management company, your real estate investments are extraordinarily passive. And the name of the game is generating passive income. That's income such that when you wake up in the morning, there's more money in your account than when you went to sleep the night before. That results in a very restful night's sleep. And finally, number 7. In general, real estate is an extraordinarily good hedge against inflation. Through inflation, what happens is that costs rise and rents go up. But remember, your mortgage has a fixed rate. We tend to fix our mortgage interest rates in the United States for 30 years, sometimes even 40 years. So when rents go up, you get more cash flow coming in. What's more, as inflation goes up, the mortgage stays the same. So every year you've got more equity that's building up. In fact, real estate is the best hedge against inflation that there is. Inflation adversely affects most things, but real estate investors tend to do really well for the simple reason that the value of the mortgage stays the same, but the value of the asset securing that mortgage, the house, tends to go up, and you get the benefit of that increase in equity. Now, I said there were 7 reasons why real estate was an extraordinarily good investment, but I can give you another 101 reasons, and that is in fact 101 things that you can do to just about any property to massively increase its value without spending much money. You think about it, what other investments are there where once you've spent money on acquiring them, you can spend a relatively small amount extra and get a disproportionately large return on it? For instance, if you build a carport that might cost you $1,000 to build, you could get an extra $1,000 a year from that property by having a carport there. This is a great thing to do if your house doesn't have a garage or a carport, and that is why I recommend that if you go through this book of 101 ideas, you'll be able to massively increase the value of your real estate without spending much money. Click the link below to secure your free copy of this book, and I can guarantee you will find lots of things that you can do to your existing property, let alone the ones you're going to look at to buy in the future. Click the link below to get your free copy right now. Thank you so much for watching these 7 ideas as to why real estate is such an extraordinarily good investment. If you enjoyed this video, make sure to keep an eye out for the next one because I know you're going to enjoy that. And remember, as always, subscribe to let us know that you're there and that you're enjoying them. Hope to see you soon. In the meantime, I want to wish you, as always, successful investing.